Hello everybody and welcome. So the tax planning season starts again, the year end is approaching and the time of income tax is about to begin. For saving tax, normally we do invest into property many a time so that we get the exemption under section 54 or 54F by buying residential property, correct? So today my topic is on property transactions. Now you would ask, why am I making a video especially on property transactions? Are they very easy? There are certain sections of the Income Tax Act which deal with property transactions and which specifically talk about the valuation of such transactions, and such provisions are not obvious and many people do not know about them. And the last thing which we want when we are trying buying our dream home or a second investment home is that the Income Tax Department sends us letters and communications and asks us to pay penalties or extra tax, right? That's the last thing that we want. So to avoid such a predicament, I am making this video and I hope it is useful. Okay, so specifically I'll be talking about two such sections, section 50C and section 56 to 10. Now section 50C is from the buyer, from the seller's perspective, and section 56 to 10 is from the buyer's perspective. Okay, so from the seller's perspective, if you are selling a property for rupees 3 lakhs, for example, 3 crores, for example, but the stamp duty value of such property is 3.5 crores, then as per this section 50C, the sales consideration, even though it is 3 crores, will be deemed to be 3.5 crores, and consequently you will have to pay tax as though you had sold that property for 3.5 crores. So important to know. And this is again very important because as a seller we do not really bother about the stamp duty because as per convention that is the buyer's responsibility, but now you should be bothered because it will definitely affect your income tax liability. Okay, now coming from the buyer's perspective. Now as the buyer, if such thing happens where the stamp duty is higher than the value that you paid for, the stamp duty value is higher than the value of the property, you would think that the only burden you have is the extra stamp duty, but wrong. You also will have an extra burden because of income tax as per section 56 to 10. The difference between the stamp duty value and the value at which you have bought, if the difference is more than rupees 50,000, such that the stamp duty value is higher and the difference is more than 50,000, then that difference between the stamp duty value and the value at which you have bought the property will be your income under the head other sources, and if it is income then obviously you will have more burden of tax. So while buying or selling property, please be careful about what the stamp duty value is. Now in many cases we do the registration later. This happens many times during under construction property where the registration of the property is at a later date and the agreement fixing the consideration is before. So in such cases, the value of the stamp duty value at the date in which the agreement is made fixing the considerations will be considered. So for that purpose, you require to have a valuation certificate of an approved value. That will come in handy to prove that the stamp duty value was appropriate for the value of the transaction. So yes, be careful, and yes, I hope you do have a lot of more properties and happy transacting. Okay, if you have any queries, questions, or just want to reach out, then please feel free. My contact details are there on screen. Also, you can leave comments in the comment section of the video and I would love to hear from you. And I hope, as always, this video is useful. Subscribe to my channel to receive more such updates. Thank you so much.